Welcome back to Investing Talk Podcast.
Today we're looking at Marvell technology.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of Marvell. For investors trying to, understand the whole AI landscape right now, it's pretty easy to just focus on the big headline chip makers.
Sure, the ones making the massive engines that run the models.
Exactly. But Marvell plays this fundamentally critical role that's a lot less visible. They provide the high-speed infrastructure, or what we like to call the plumbing, that connects all those powerful processors together.
I think that plumbing analogy is perfect. It really gets to the core of what Marvell is actually selling, right? It's connectivity and, well, speed.
Right.
Their success isn't tied to one specific AI model winning out. It's tied to the nonstop, massive build-out of data centers all over the world.
And specifically the ones optimized for generative AI.
Yeah.
And this is all happening in an environment that has become surprisingly fractured. We're basically watching a quiet chip war unfold, and that makes Marvell even more relevant.
A quiet chip war.
Yeah. While one big player sort of dominates the general-purpose AI accelerator market, you have the major cloud hyperscalers, your Amazons, your Googles, and they're all focused on achieving what they call silicon sovereignty.
Okay, that's a term we hear a lot now. Silicon sovereignty. So what does that mean? It's about vertical integration, designing their own specialized chips like Google's TPUs or Amazon's new Axion CPUs.
That's it, exactly.
Yeah.
It's all about scale and the total cost of ownership. These hyperscalers, they run two different kinds of AI jobs. Training, which is massively compute intensive, and then inference, which is running the model after it's built.
Okay.
So by designing their own custom chips, they can tailor the silicon for their exact needs. And this reportedly gives them up to, get this, 4 times better AI performance per dollar for inference.
4 times. That is staggering savings when you're running tens of thousands of chips around the clock. So this fragmentation, this decision by the biggest customers to design their own hardware, that's actually the main catalyst for Marvell.
Precisely. This fragmentation is fantastic for Marvell because they operate right in that indispensable middle layer. They don't care whose custom chip is running the job.
Right, they just connect them all.
They just care that data needs to move between thousands of these units as fast as electronically possible. Every new custom chip built by a cloud player is a new opportunity for Marvell to supply the high-speed networking components. Their market actually gets bigger the more specialized the industry becomes.
That completely reframes the whole market. So if their advantage is being the essential glue, what's the core technology that keeps them ahead? It's not just about manufacturing speed, is it?
It's technology leadership in connectivity and custom design. They're the market leaders in next-gen networking silicon, especially in 800G optics. And to be clear, 800G isn't just a slightly faster cable. It's the essential fiber connectivity that dictates the internal backbone speed of an entire AI supercomputer. It helps overcome these huge data bottlenecks.
So if the chips are the engines, the optics are the highways, and the wider the highway, the faster everything can move. Why is 800G such a big deal now, moving past the old 400G standard?
It's because of the sheer scale of modern training jobs. When you cluster, tens of thousands of powerful chips together, the limiting factor isn't one chip's power. It's the latency of the communication system. If that system can't move data fast enough, the processors just sit there idle, waiting for information. Marvell's custom silicon for 800G speeds, it solves that bottleneck. It makes them a mandatory partner.
So their growth is tied to this structural AI expansion, not the usual cyclical hardware sales. That's a powerful position, but of course, strategy has to translate into results. So let's pivot to the financials.
You can see it converting directly into really strong top-line performance. For the quarter ending in August 2025, Marvell reported total revenue of $2.01 billion. That's a solid jump from the $1.83 billion in the prior quarter. It shows real momentum.
And management isn't signaling any slowdown, right? They guided Q4 fiscal 2025 revenue toward $2.06 billion, which confirms that demand from those data center customers is still going strong.
Absolutely. And what might be even more important than just the revenue number is the quality of that revenue. You see that reflected in the margins. The non-GAAP gross margin hit a very, very strong 63.3%.
63%. That's well into specialized high-value tech territory. That's much higher than what you see from commodity chip makers. What does that tell you?
It tells you their revenue is heavily weighted toward those high-margin data center and AI products, the custom silicon, not just mass-market chips. When a company holds margins in the mid-60s, it suggests real pricing power, a tech advantage that's tough to copy.
And that margin power flows right to the bottom line. Let's talk earnings.
Diluted non-GAAP EPS hit 45 cents in Q2 2025. And that earnings acceleration is projected to continue, tied directly to the ramp-up of their newest AI products being shipped to those hyperscalers we talked about.
Beyond the quarterly numbers, what about financial resilience? This sector requires constant, huge R&D investment. How's the balance sheet?
It's in great shape, really flexible. Marvell reported $1.13 billion in cash and short-term investments. And on top of that, they generated $517 million in operating cash flow in that one quarter alone.
Wow, over $500 million in operating cash in a single quarter. That's the capital that funds the R&D to maintain their lead in 800G and custom silicon. It's a reinvestment machine.
It is. And for overall financial liquidity, their current ratio is strong at 2.12. So they have more than twice the liquid assets needed to cover short-term obligations, which just gives them a nice buffer.
That gives you a lot of confidence in the fundamentals. Okay, so now let's look at how the market is actually reacting to all this. What are the charts telling us about Marvell?
The technical trend is, well, it's firmly bullish. We saw a really definitive rally from a September 2025 low near $74, pushing the stock recently above 84. And if you look at the chart, it's a clean pattern of higher lows and higher highs.
So a sustained uptrend, not just a quick pop.
Exactly. And it's trading comfortably above both its 50-day and 200-day moving averages, which are, classic indicators of a healthy long-term trend.
What about momentum?
The Relative Strength Index, the RSI, is sitting in a great spot, the 58 to 63 range. It suggests positive momentum is flowing in, but the stock isn't immediately overbought. There's still room for it to run.
And we know that institutional conviction can be a huge driver for a stock like this. How strong is the support there?
It's very significant. Over 72% of Marvell shares are held by institutions, major funds, pensions. That shows strong conviction from professional money managers. And after the last earnings report, we saw multiple analysts raise their price targets, specifically calling out their outperformance in AI.
That external validation seems to line up with the technicals. We're seeing a 3-month bullish outlook projected in, the $82 to $97 range?
Yeah, that's the range, assuming the momentum holds.
Yeah.
But that range is also contingent on the catalysts we need to talk about. And first, of course, we have to touch on the speculative buzz. What are the whispers?
Okay, so a couple of unverified things here that could really move the stock. The most exciting chatter is that Marvell could be announced as a new custom silicon provider for a top 3 cloud player at a tech conference this December.
That would be huge. It would be direct validation of their expertise in custom design and basically confirm they're the chosen plumbing provider for one of the world's biggest AI clusters. That would unlock a massive new revenue stream.
And the other bit of speculation.
It's about their expansion strategy. There's some ongoing buzz about potential small-scale acquisitions to expand their footprint into edge AI, to supplement their core data center business.
Okay, let's pivot from speculation to the concrete catalysts. What should people be watching for over the next, say, 3 months?
The first and most immediate is the Q3 fiscal 2026 earnings release.
Yeah.
That's scheduled for late December 2025. The market's expecting strong guidance. A beat there would be a major driver.
And that ties into the custom silicon buzz, right? Management has been teasing a big hardware reveal.
They have. They've teased the launch of their next-gen custom AI and acceleration chips, also timed for December. This is critical because these chips are designed specifically to unlock new business with the hyperscalers. This is where the R&D pays off.
So we have an earnings event and a key product launch, basically back-to-back, anything in the new year.
Yep. Early January brings CES 2026. That's a huge industry event where we'd expect more product and partner announcements. It's the perfect stage for them to formalize any new big deals.
So with all this positive momentum, we still have to be diligent about the risks. What are the primary concerns for investors here?
The first risk is always classic semiconductor cyclicality. Inventory management. Even with all the AI growth, there's a risk of customer inventory digestion. If a big customer overordered or delays a build-out, they might slow down orders, which could temper growth rates for a quarter or two.
That's the industry-wide hazard. But Marvell also faces some specific execution risks, doesn't it?
That's right. And this is probably the biggest risk for them specifically. They've staked their growth on being the tech leader. Any significant delay in that crucial December product launch or a slower than expected ramp-up from partners could really hurt their results and damage market perception. They have to deliver.
And finally, there's always the broader market volatility.
Always. The whole semiconductor sector is exposed to macro volatility, interest rates, geopolitical stuff. Marvell's focus on data infrastructure gives them some insulation compared to consumer chip makers, but a sector-wide downturn will still drag them down.
This paints a really compelling picture, though. You've got accelerating high-margin revenue, a rock-solid balance sheet, and this powerful position as the key supplier in a fragmented chip war.
It really creates a fascinating opportunity for two different kinds of investors. On one hand, it's an attractive prospect for short-term traders looking to leverage those December and January catalysts, the earnings, the chip launch, as potential triggers.
But the underlying story also supports a long-term hold.
Absolutely. The long-term thesis just benefits from the structural expansion of AI infrastructure. They are the essential plumbing that has to be installed, regardless of who wins the war between general-purpose and custom-designed chips. Marvell is just so well-positioned for the future of cloud and AI.
A company that benefits from the urgent need for speed today and the inevitable growth of digital infrastructure tomorrow. Here's a thought to leave you with. If the cost of computing power keeps falling, but the cost of moving all that data reliably keeps rising, does Marvell's networking silicon eventually become the most valuable component in the whole AI stack?
That's a provocative question for the future. Make sure you subscribe to the podcast so you don't miss our next stock analysis.